Welcome back. You're still with us here on a Business AM. We are closing the year for what has been a rocky environment for the banking industry. We're still with Gabriela Mwendwa, is an investment associate at Horizon Africa Capital, and Arnold Ngasale, senior relationship manager, Rafiki Bank. All right, Gabriel, more mergers and acquisitions as a result of the coronavirus pandemic in 2020?
Yes, for sure. That is going to keep coming.
Yes.
And the reason for that is simple because naturally banks are opened by communities. Yeah. And that has been the previous origin of how banks and societies grew.
Yes.
But now with technology and integration, it's not necessary to feel you belong to a certain bank because we are all banking from our phones and computers. So the relationship touch is not there for most of the individuals, etc. So people are willing now to bank with banks they have no relationships with. You can just move banks.
Yes.
So the small banks are losing their edge because previously what they used to do is pay higher costs of deposits. So while equity is paying 2-3%, these guys were paying upwards of 7 to 10% even sometimes. So it's becoming untenable, especially with the rate controls. Where you can't lend beyond 14-15%.
Yes.
Now, if you're telling me I have to pay my people, or rather the people who are giving me money 7-8%, I have a very small margin. So it's no longer making sense for them. So you either get a very heavy capital injection, which is an acquisition by a foreign entity, or you get, a merger for a local entity. So those ones are going to definitely keep coming.
Yes. All right. Arnold, same question as well. Yeah. I mean, yes, the effect is there. If bigger banks are crying, then you do expect that the smaller banks have been affected adversely as well.
Yeah.
Same thing that we're going to see. And how do you expect that the banking industry going to shape in 2021?
Yeah. So the conversation on increasing the capital of banks has been there for quite some time.
Yes.
And the essence of that is essentially to have the banks more robust. If you
Yes.
have more capital, you have more room to absorb any shocks that may come your way.
Yes.
Now, we've mentioned mergers, we've mentioned acquisitions, but there's also an option of recapitalizing.
Yes.
So as a banker, what you can do, whatever money you're making, you can take a haircut on your profit and recapitalize so that you increase your position as far as your core capital is concerned.
Yes.
That's option number one. Option number two, you can diversify. Because I think one of the things which ails banking is over-reliance on lending. While banking, you have other options. You have other solutions which you can offer. You can offer FX solutions. You can offer transactional banking solutions.
Yes.
So what we're likely to see again in 2021 is that aspect of diversifying your income streams by maybe looking at transactional banking options, looking at contingent liabilities, and so on and so forth.
Yes.
Yeah.
All right, Arnold, just before I let you go on that as well, yeah. I mean, well, the CBK was giving us that report on what the NPL book is as of now.
Yeah.
They were saying that, well, some sectors of the economy on which most of these banks were heavily lending towards in terms of lending, those are the banks that have been heavily affected as well.
Yeah.
Where are the smaller banks in the country? I mean, where would you find them? Would you find them integrated in the government paper, or are they within the economy, which is the smaller businesses have been heavily affected?
Yeah. Actually, most banks do mass market lending.
Yes.
And your mass market lending is essentially your household loans, your personal loans, and SME loans.
Yes.
So that's where most banks play. And these kind of businesses need personalized services. And if you don't do that, you're going to take a hit. You need to understand the business cycles of the customer, transactional cycles of the customer, and then you peg your solutions based on that.
Yes.
And most small banks don't have a direct avenue to buy government paper. They will either buy them through investment bankers like the likes of Gabriel, or they'll either buy them through commercial banks, because you'll find that most small banks hold accounts with bigger banks for support in transactional in the transactional aspect of banking. So essentially, that's how it works. So for smaller banks, they have more work cut out for them. But again, it's all about innovation. Someone once told me, no matter how bad things are, there's always someone who's going to be number one. So it's always about how you position yourself, how you package your solutions, and how you assess the economy.
Yes. All right, Gabriel, which therefore begs me to ask you this question. I mean, we've seen the exact way in which the economy has been reshaped by the coronavirus pandemic. What sort of shift are we expecting to see in 2021 as a lesson for the industry out of the coronavirus pandemic?
First thing that we're going to see is banks are going to change how they do their mobile banking and lending, because I think previously they were going all out. People could borrow left, right, center through their mobile applications.
Yes.
So the banks have actually been hit most through that line. So they have been hit the most through those small personal loans, because they could no longer threaten people to list them. So there's going to be a change in that line.
Yes.
Then again, we're going to see a change in pricing of loans. There's going to be a more robust pricing, because like we say, customers are strongly resisting the increase.
Yes.
Banks are trying, but customers are strongly resisting. CBK is also asking them to remain within the same range, but
Yes.
banks want to, and eventually will get their way to increase those lending rates. So we're going to see a more robust and customer interactive pricing methodology that is going to come.
Yes. All right, Gabriel. Yes, and I'm going to ask you this question as well. I'm going to put the same question to Arnold as well. I mean, if you look at what the GDP has been projected this year, revised to 0.6%, which was a good. So now, as a banker, you're looking at that, and then CBK is coming and telling you, well, the biggest contributors to your defaulting book have been the heavily affected sectors: tourism, agriculture, education. Would you like to go back into that in 2021? What sort of view are they going to give this number in 2021? Because the biggest issue all the way from 2019, again in 2020, is that, well, they have not been lending heavily to the mass market. Are they going to keep off again and wait for us to recover?
So the banks are not going to increase actually the lending to the public. I mean, we've seen private growth, but I think it's not going to be as massive as people think.
Yes.
They're still going to be heavy in government. They're
Yes.
still going to shy away from a weak economy, because that's what we have.
Yes.
So there's no, and I don't want them risking my deposits. So let them do what they have to do and keep my deposits safe.
I know, I want to ask you the same question. Yeah. Well, you saw that number, and we've had different ones. And by the way, Njoboge came and gave us 3.5, and I don't know where he was getting it from. People question that. Treasury came last week and told us, well, 0.6%. Yeah. As a banker, when you're looking at that, I was saying, wow, 0.6%, so it's going to take time to recover. Yeah. Do you want to get into the economy or wait again for a new number?
It's a waiting game, honestly. You have to be responsible as a banker, honestly.
Yes.
But as I mentioned before, you have to be innovative.
Yes.
I think last year but one, the government was really intentional in trying to cover the mass market.
Yes.
With the Stawi app, whereby it was essentially trying to pull several banks so that they can bank the unbanked and bank the SMEs. So it's all about the innovation. So as bankers, we all can't buy government paper. The bids will be more than the takers.
Yes.
The bidders will be more than the takers. So we need to find a situation whereby we accommodate the market.
Yes.
Financial inclusion is essentially part and parcel of SME and microfinance banking.
Yes.
And partnerships are also part and parcel of our business. Aspects like agribusiness, we are partnering with international organizations to assist smallholder farmers. We have other international organizations which are keen to partner with youth entrepreneurs and so on and so forth.
Yes.
So as much as most conventional bankers will automatically just shy away from the mass market, the rest of us need to be innovative to find ways of accommodating and basically promulgate financial inclusion as far as the market is concerned.
Gabriel, second last question as we clear 2020 in this space. Gabriel, can you confirm whether you can get me? Yes, I think I've logged.
I can get you.
Oh, you can get me. Good. All right. Now, Gabriel, the question is this. I mean, the biggest announcement again that we saw from the Central Bank of Kenya was that cash reserve ratio that was actually reduced to 4.25%. Would you say that sort of helped the banking industry as they were trying to navigate the coronavirus pandemic? How would you rate that sort of functionality from the CBK?
I think it was a bit small, because I mean, look at this way. These assets, or rather loans, worth towards 3 trillion, and the reserve change was just 35 billion.
Yes.
So it was not that big an impact on banks. It wasn't a big impact. I mean, it does benefit a bank because, I mean, assuming as Equity Bank, your percentage is 1 billion, you've increased, and you invested in a government paper, you're making 8%. So it's an additional 80 million into your profit line because you can invest this money. But, you know, in the larger scheme of things, whereby, you know, these are banks that make profits of up to 25 billion, then it's not 80 million shillings, you'll agree with me, is not biggest savior that I would.
Yes.
So all we can say is thank you. But it was a small token. It was not big enough. Yeah.
Yes. Arnold, do you share the same sentiment?
Yeah, similar sentiments. Drop in the ocean, so to speak.
Yes.
Considering the volumes which these big banks deal. But at the same time, the CBK will always take a move
Yes.
to try and correct or reposition the economy.
Yes.
So it's marginal, but at the same time there's a small differential therein. Now, when you look at now the microfinance element of things, I think it's you feel, because as microfinance banks, they also place monies with the commercial banks.
Yes.
So that element of my return on my placement is always there. Is also there.
Yes.
So from where we sit, it's essentially a small differential, but at the same, nonetheless, the significance is still there.
All right, Gabriel, now then, the magic number that we've seen for the entire again of 2020, even as we talk about the cap on interest rates, that CBR, 7%. Wow, our man has stuck it there as if it's exactly what we need. There were fears it could go lower. There were guys who were saying, well, pull it lower. I mean, we need our money, we need cheaper money in the economy, but we didn't see it go low below that. I mean, talk to me, good have we had it lower, especially during this time of the COVID-19 pandemic?
But having it lower, you see, why would you want to have it lower? Because it means that you are.
Yes.
We are sure that's not going to happen. Even if they lower the CBR,
Yes.
banks are not. We no longer have the rate caps, so banks are not going to go
Yes.
now. So the effect might be zero.
Yes.
It might actually reduce the profit they get from government paper, but that will not change what banks are doing now, investing in government paper. But people are not seeing is that we actually need that rate to go slightly higher,
Yes.
so that we can have foreigners invest, because we need dollars to come back into the economy. Because
Yes, Gabriel, I lost you at that last part. Let me put on the same question to Arnold, and hopefully we can get you back. Gabriel, I think though you can get me now, isn't it? You are at the point where you're saying that we need it actually higher.
yes, so we need to have it actually higher,
Yes.
because we need investors to come into the country. It is actually higher by, let's say, 2-3%.
Yes.
It makes it more attractive than the neighbors, than the West, than Asia in terms of rate of return for investors.
Yes.
It means our bonds are more attractive. It means the stock market is more attractive. So I think we might need to consider which part of the economic cycle we are in.
Yes.
And we need dollars now more than anything. That's what we need. We need foreign investments. So considering increasing that rate slightly might actually be more beneficial than lowering it.
Yes.
Because lowering it, there's not going to be change in how much we're borrowing from banks. So we'd rather have foreigners come in by increasing it. Yeah.
Pretty much. Arnold, share the same sentiments or
Yeah.
slight outlook on that?
Yeah, so essentially in an ideal world,
Yes.
if you lower the CBR rate, the bankers will also lower, and therefore you'll have cheap credit.
Yes.
But on the ground things are normally different. And it's meant to stimulate the economy, whereby you have more access to credit, more movement of money, more movement in goods and services, and so on and so forth.
Yes.
However, if the same doesn't happen at the tip, whereby the money is reaching the consumer, the effect is really not there.
Yes.
Concerning what Gabriel has mentioned on our balance of payment, the Kenyan shilling to the USD is at an all-time low or high, depending on how you look at it, because dollar is going at around levels of 110, 109.50, 110,
Yes.
which is extremely high for importers. So we essentially need more money to come in. The country has been depending on diaspora remittances. The country has also been depending a lot on horticulture exports.
Yes.
That has been affected by the second wave of coronavirus in Europe. So it's a balancing act. It depends on what is the outlook. And I feel that we may need more data as far as the entire economy is concerned, so that we can be able to make a prudent decision
Yes.
as far as the economy is concerned.
Right.
But the idea of lowering the CBR would probably have worked if the capping was still there, because it would just move like a ruler. You're moving one tip and the other tip is also moving.
Yes,
Yeah.
pretty much. All right, Gabriel. All right, so let me talk to you about 2021, therefore. Is there anything that you can sort of forecast for me as regards this industry in 2021 coming out of or still in the coronavirus pandemic?
So, if banks have done a lot of strategy changes,
Yes.
and I think that's what is going to get them out of the crisis in 2021. The
Yes.
restructuring in their operations, boosting of their technology. Even smaller banks have now invested in more robust technology and customer interaction systems.
Yes.
That is what I believe is going to get them out of 2021. It's going to get them out of the hole, basically, yeah.
Yes, pretty much. And I want to cap that conversation. Talk to me about the scene you expect in this industry in 2021.
Yeah, I think 2021 is going to be an interesting year.
Yes.
Particularly because 2020 has been a learning curve on how
Yes.
to deal with a black swan,
Yes.
an unexpected event. So 2021 is going to see a lot of innovation. We're also going to see, you've seen the likes of KCB reducing the amount of money which they're lending via mobile phones.
Yes.
So it's going to be a cocktail of solutions being offered by banks. But at the same time, I feel that innovation is going to take center stage.
Yes.
Banks have moved more to mobile solutions, not only for deposits, but other solutions, other banking solutions, FX solutions, transactional banking solutions, and so on and so forth. And most banks are actually now encouraging their clients to use solutions like till numbers, pay bill numbers, and so on and so forth. So 2021 is going to be interesting in that particular aspect. But from where we sit, again, it will also depend on how do you project as a banker where you want to be. What is the portfolio? What makes your portfolio as a banker?
Yes.
What industry do your clients play in, and how do you essentially tailor make your solutions to fit their needs? But I feel that 2021, as much as that is the case, there's still a lot of room for business, a lot of opportunity for business, bearing in mind it's a year before the election.
Pretty much.
Yeah.
All right, gentlemen. Gabriel, thank you very much for being a part and parcel of Metropole TV for the entire of 2020. Yes, I dare say that. And I wish you a Merry Christmas and a prosperous 2021, sir.
Thank you. Same to you, and thank you to all the team at me.
All right, Arnold, to you too now. Thank you very much for clearing 2020 with us, and I hope you shall be part of the Metropole Business AM team once we start 2021.
I'll definitely be glad. Asante sana for the opportunity, and kudos to the entire Metropole TV team.
Fantastic, and guess what? We shall be talking probably more about Rafiki Bank, isn't
Yes,
it?
yes.
Come 2021.
Definitely.
I promise you that.
Definitely.
A whole 24 minutes.
Definitely.
All right. And to you, everybody who's watching and being part of us in 2020, I wish you a Merry Christmas and a prosperous 2021. Good morning.